Hello there, this is Hector. Welcome to a new video of my forex trading course. In the previous video, we've reviewed the three simple moving averages I like to use in order to search for trends, and more specifically, the 6 conditions I like to be fulfilled before, labeling a trend as a healthy trend. Okay. Remember, all those 6 conditions were having having the moving averages all in order, all pointing in the same direction, parallel to each other, price nowhere near the 100, etc., etc. Okay. If you remember, the last condition, the 6th condition, was to have price harmonically swinging off the dynamic area of support and resistance, which, if you remember, it was the area between the 30 and the 50 simple moving average. All right, I do understand that this 6th condition might not be as intuitive, as easy to understand as the previous 5, and that's the reason as of why I have prepared a quick video, short video, so you guys understand this concept perfectly. Okay. As you can see in my screen, I have 3 charts. They are basically the same chart. They are all the euro against the Australian dollar, and spanning from the 30th of May 2007. As you can see, they all begin at the 30th of May 2007. And all the way to the 13th of June 2007. Okay. So basically, they span for about 2 weeks, more or less. Like I say, from the 30th of May to the 13th of June. Yeah, about 2 weeks. Now, the question is, which time frame does this downtrend belong to? Okay, it's clear that we are downtrending. Okay, it's clear the price is clearly downtrending between these 2 dates. Now, is this a 4-hour time frame, or is it a 1-hour time frame, or is it finally a 30-minute time frame? Now, we are going to be using the 6th condition to determine whether this trend or what time frame fits this trend the best. All right. As we can see, all of them have the 3 moving averages pointing down, parallel to each other. All in order, etc., etc. Actually, let's begin with the 4-hour time frame. Let me expand out the 4-hour time frame so we have a clearer picture. All right, in the 4-hour time frame, as I was saying, we can clearly see how all the 3 simple moving averages are in order. Price nowhere near the 100. They all point in the same direction. Etc., etc. Okay, so we are downtrending. Now, what about the 6th condition? Remember, having price swinging off the dynamic area of support and resistance. Well, as we can see, every time we have a pullback, price fell shy of the dynamic area of resistance. It doesn't quite reach that area. It doesn't quite even reach the 30 simple moving average, which is the first moving average of all. Price is not hugging the dynamic area of resistance. All right. Sure, they are all in order. Sure, they are all parallel to each other. Sure, they are all pointing in the same direction, etc., etc. But the 6th condition is not fulfilled. Price is not hugging, is not swinging off the dynamic area of resistance. Okay, it's always it falls shy, like I say, of that area. It doesn't quite reach that area. So the 6th condition on the 4-hour time frame is not fulfilled, is it? Now, let's have a look at the 30 minutes time frame. As you can see, this is a pretty zoomed out chart because, I need to, it's a much shorter time frame, and therefore I need to squeeze in my chart in order to fit it on the screen. Now, in the 30 minutes time frame, what we see, we see a number of crossovers there. The moving averages are crossing over. Moreover, every time price retraces or pullbacks, the dynamic area sometimes doesn't quite even hold price. It goes all the way back to the 100. In fact, it breaches above the 100. Like I said, number of crossovers there, there, and all the crossover there, etc., etc. So we have a few different conditions not being fulfilled. All right. Now let me go into the 1 hour time frame, expand this chart, and as you can see, well, the conditions are better fulfilled on this time frame. Okay, firstly, yes, we have the moving averages pointing in the same direction. Yes, all parallel to each other. Price never breaching the 100. And finally, what about the 6th condition? Well, it is indeed applying. Have a look. Price, every time it swings, okay, the dynamic area, the area between the 30 and the 50 moving average, indeed holds the retracements. Okay, sure, we have a little breach above, but immediately after it goes back down without getting anywhere near the 100. Okay, and moreover, every time we have a pullback, price hacks the dynamic area of resistance. Okay, always mark the area between the 30 and the 50. That's a decision taking area. That's where, well, we want the pullbacks to end, and from there, find resistance. Price turns around, and a new swing is created. Well, in the direction of the trend, in the direction of the moving averages. Okay, so as far as the 6th condition, this is clearly a 1 hour time frame. The 4 hours time frame, sure, it also fulfills all the different 5 conditions, but it does not fulfill the 6th condition. Price is not hugging the moving out the dynamic area up on the pullback. Okay, it always falls shy of that area. Moreover, in the 30 minutes time frame, as I was saying, well, this one. Actually, we have a number of conditions that are being violated, are being not respected with those crossovers, with price reaching the 100, etc., etc. So, if we were to search for trading opportunities in the euro against the Australian dollar throughout this nice downtrend, the best time frame to search for opportunities would be the 1 hour time frame, because all the conditions are respected and because price is, well, harmonically swinging off that key area, the dynamic area of support and resistance. Now, why is it important to have price harmonically swinging off this area? Because it warns us in advance when the trend might be coming to an end. Now, let me go back into the 4 hours time frame. At this time, right at the end of this trend, we see price reaching back to the dynamic area of resistance. Okay, at this time, the moving averages are still pointing down. They're still in order, etc., etc. So, from a technical point of view, we are still in a downtrend. Okay, so upon this pullback, we might be tempted to begin searching for short opportunities for a whole new swing to the downside. However, this is a mistake, and the reason it is a mistake is because we were not looking into this trend on the right time frame. This was not a 4 hours time frame. This was a 1 hour time frame. So if we search for short opportunities, once price pulls back to the dynamic area on the 4 hours time frame, like I say, we might be looking to enter the market at the wrong time. Okay, at this precise time, this trend has already lost momentum, has already lost steam, and it's already weakening down. Okay, if we were to follow this trend on the right time frame, meaning on the 1 hour time frame, actually, let me zoom in a little bit more and scroll back right there. Okay, at this time, we already had early signals of warning that we may not want to be searching for short opportunities anymore. Firstly, okay, all the way along, this was a nice downtrend. The dynamic area is holding price. Yeah, we have a breach above that, but immediately after it goes back down, all the way until here. And now let me explain you why. all the way until here, the moving averages were pointing down, the dynamic area was respected, they were all in order, etc., etc. But at this point, the dynamic area gets breached. Okay, it does not work as resistance anymore. Let me take off this line. At this time of the chart, at this junction, the dynamic area, the moving averages, don't hold price below anymore. They stop working as resistance. Okay, they were working as resistance there. They worked as resistance there, and again and again and again and again. But bang! They don't work as resistance anymore here. In fact, price breaches above the 100. Okay. Moreover, at this precise junction of the chart, have a look at what happens to the moving averages. They are flattening out. Actually, they are not pointing down anymore. They are pointing sideways. Okay. It was an early indication that something is wrong here. This trend, this beautiful downtrend, is losing momentum at this junction of the chart. Okay, the dynamic area is breached. Okay, the sixth condition is breached. Now the 100 is breached as well. We have another condition down the loop. Moreover, the moving averages are flattening out. Okay, another condition that goes out of the window. Moreover, we have a crossover. So at this precise time, we have plenty of early signals of warning that we do not want to search for short opportunities anymore. And in fact, bang! Have a look at what happens. Well, just the next day over, price shoots above. The trend comes to an end, okay, well, and the moving averages begin to point up, all right? If we were to search for, if we were looking, following this trend, on the 4 hours time frame, at this time, okay, at this precise junction of the chart, we will still be tempted to search for short opportunities, and as you can see, it would have been a losing trade, okay? Price shot up for, actually, about 150 pips and we obviously would have scored the loss. Now, if we were looking into the right time frame, into the 1 hour time frame, at this precise time, we already knew that something was wrong with this chart. The 100 is breached, moving averages flattening out, crossover, etc., etc. Okay, number of conditions are falling out of place, one after the other one. And, well, you know, at this time, you don't want to be searching for short opportunities anymore. Bang! You know, it would have been a losing trade. This is the importance of following a trend on the right time frame, okay? In this case, on the daily time frame, because, as you can see, well, the sixth condition was telling us that the best time frame to follow this trend, this euro against the Australian dollar, was indeed the 1 hour time frame. Not the 30 minutes time frame, not the 4 hours time frame, the 1 hour time frame. And we got that clue. We knew that the 1 hour time frame was the right chart to follow from the sixth condition, how price respects the dynamic area of resistance all the way until here, where things begin to get ugly, and at this point we want to search for trades no longer. All right guys, that's all for this video. I hope you understand now the importance of having price harmonically swinging off the dynamic area of resistance or support, depending whether we are in an uptrend or in a downtrend, and why that condition is important to be fulfilled, and why it's important once we spot a downtrend in a scenario to scan or to follow that trend on the right time frame, okay? To to understand or to label a trend as a 1 hour time frame trend or as a 4 hours time frame trend, etc., etc. It doesn't matter what time frame the trend belongs to, as long as we follow the trend on the right time frame, okay? In this case, as I was saying before, it was clearly the 1 hour time frame. Alright guys, that's all for this video. I hope you understand now what the sixth condition is all about. However, if you have any question, please don't hesitate to drop me an email. I will very gladly answer back all your questions. Alright? Okay, I'll see you in the next video. Bye bye.